Hey, what's up? First off, let me just say this is not financial advice. This is just some guy on YouTube's opinion. Also, if you want to know how to invest for beginners, I made a video, I'll put that right here, that you could watch. This is titled How to Invest in Stocks for Beginners, and the reason I mention that is if you were just wondering how to invest, period, I really wouldn't recommend starting with stocks, but that's a whole nother video that you could watch if you're curious about that. But let's get on to the topic of this actual video, how to invest in stocks for beginners. Now, a little bit about me. I bought my first stocks back in June 2007. Yes, that June 2007. But I am very happy that that was the first time I bought stocks because I think it taught me a lesson that I feel like a lot of people these days are easily forgetting. And that's the fact that there is risk to buying stocks. There's a lot of uncertainty. We don't know what tomorrow brings. And if anybody tries to tell you they know what's going to happen with the stock, I wouldn't listen to them at all because they are lying. Nobody knows what is going to happen. All we have is data and somewhat of statistics and an idea or an opinion of what we think the future holds. The lesson is don't ever invest money that you cannot afford to lose. I like to think of it as gambling. And although the odds are much better than if you were to go into a casino, you need to understand that there is risk involved and you don't want to be making bets or investing money that if you were to lose, you're not going to be able to pay, next month's rent or your cell phone bill or that sort of thing. But since I first started investing, so much has changed. And the changes that have been made are in the benefit of you, the investor. So much so that I almost feel like if you don't take advantage of these changes, I would at least feel guilty. And I would almost argue that if you're in a position to where you could invest, you should feel guilty for not doing it, given how easy it is to do these days. I like to think that there's going to be two kinds of people that watch this video. Someone who watches it, goes on with their life, doesn't really think much of it, and then somebody else that'll watch it, and there's going to be this little thought in their head, that what if thought, that's going to force them to take an action that doesn't take much longer than watching this video, but could be one of the biggest impacts on that individual's life. So before we get to what that action is, I want to do a little thought experiment with you. In the world of so much uncertainty, especially with investing, there is actually one thing that is 100% for sure certain that will happen, and that is the passage of time. Whether you want it to or not, no matter what you do and how hard you try to stop it, 2 years from now is going to be a place and time that will happen. Hopefully we're all still here in 2 years, but 6 months is coming, 1 year is coming, 2 years is coming. No matter what, it will be 2 years from now. And just understanding that concept and idea, if you think about it, you could do something today, right now, and that thing that you do has the chance to be one of the best things you ever did in your entire life. And like I said, no matter what, you're going to be sitting 2 years from now, and you might think, what if I just did that? I wonder what would have happened. And obviously that's going to be investing in stocks in the way that I'm going to talk about and show you today. But I want to go back to that whole risk idea and help you think about how much money should I be investing. The way I like to think about it is, okay, today for lunch, a lot of us could go out there and we could buy a sandwich. That sandwich, call it, $5 to $10 is what it costs. That money you give to the vendor for that sandwich, that money is gone. It is no longer accessible. You no longer own it or have it. It's out of mind, out of sight, just gone. And in return, you're going to get a sandwich. Now, there's two things there. One is that money, that $5 to $10, you're totally comfortable with handing that over and knowing that it's gone and you'll never see it again. And the other thing with that is if you were to somehow lose that sandwich or you never got that sandwich for that money you give, you're going to be okay. Yeah, you might be a little bit hangry, but you're totally going to survive by not having lunch today and not having that sandwich. That's the money that I think you should be investing. Money that you can completely afford to lose, it's not a problem, and nothing bad will come of it. Now, when I started investing, there was no such thing as buying stocks for free. You always had to pay a fee. And that fee was usually the cost of the sandwich. It was like $7 to $10. I remember thinking that Scott trade back in the day was $7 trade was awesome, was unreal, because normally it was more than that, but today it's completely free. Another thing that's awesome and still a lot of people don't even realize is you don't have to buy an entire share of a stock. A lot of people are like, yeah, I'd love to own Amazon, but it's like over $3,000 a share. There's no way I could buy it. But they don't realize you could spend $1. You can buy $1 worth of Amazon, not pay any commission fees, and own that, partial fraction of a share. These may seem like little things, but these are actually a huge deal. And when you mix these two little things with automation that's available now that wasn't in the past, you could do one action right now that will cause it so that you're always investing in your future. And I just think it's beautiful how sometimes the most simplest, easiest thing is actually the best strategy, the best way to do something. And the reason I bring that up is people make investing really complicated and hard, and there probably is truth that, if you were to invest, 40 hours a week, make it a full-time job in investing, I would hope that you'd be able to make some decent money, but it's complicated, it's very hard. One of the biggest mistakes people make is they're always trying to time the market, and for most people, that is a losing strategy, a losing game. Because like I said before, nobody actually knows. There's a lot of uncertainty. But we can just eliminate all that time you're going to spend studying on stocks, and eliminate that whole idea of trying to time the market perfectly, and just make it simple and easy. Instead of trying to time the market, you're just going to buy the market at all points in time. And believe it or not, when you actually look at the math, that is one of the best strategies when you back test it, and one that's just crazy easy to implement. Like, anyone can do it, and you don't even have to think about it. You just set it and forget it. So now let's get to the whole point. What I'm about to show you is that you are going to take money you can afford to lose. I would think of it as you're going to buy a sandwich once a day, once a week, maybe once a month, maybe it's 10 sandwiches, whatever it is for you. But let's just say you're going to buy a sandwich once a week, and you're going to continuously buy the market once a week. So you don't have to worry about timing it. If it was 2007 like it was for me, and we're about to have this big market crash like it did in 2008, it's not a big deal, because you're just going to buy. You're going to buy all the way down. You're going to buy at the bottom. You're going to buy at the top. And unless something devastating happens to the stock market for decades, statistically, the odds look pretty good. But like I said, it doesn't matter, because it's just a sandwich. You can afford to lose this money. It's not a big deal. And it's so thoughtless and easy. Why not do it? Maybe you'll get lucky. And like I said earlier, maybe it's one of the best things you ever do in your entire life. Maybe when it comes time to retirement, you're going to think back and be like, man, thank goodness I watched that YouTube video. All right, so step one is you're going to download an app called Robinhood. And why Robinhood? There's a lot of reasons, but the biggest one is it's commission free. There's a lot of other trading brokerages right now that do commission free, but it's pretty much because Robinhood was the first to do it, and out of competition kind of forced others to do it. But they have a great user interface, and you don't even need a computer. All you need is your phone. And they also make it super easy to buy fractions of a stock, so you can just put $1 in, and you can do it on a reoccurring basis, whether that's every day, every week, every month. So that's step one, is get that app. I'll put an affiliate link down in the description. If you don't know where to get it, you can just click on that link and get the Robinhood account. The next thing you need to do is connect your bank account with Robinhood, so you can move money from your bank account over to Robinhood. Now for the rest of this video, I'm actually going to jump into the Robinhood user interface to show you how to set up reoccurring investments. And again, just think of it like buying a sandwich as often as you can, and you're going to put that into the stock market, and you're never going to think about it again. All right, so the first thing is find the Robinhood app and install it. And then you're going to add your bank account. After you've done that and they're linked, you're now able to do reoccurring investments. I believe the smallest amount you can invest at a time is $1. And if you're going to be doing a small amount, in my personal opinion, the more diversified you are, the better. One easy way to have small investments be diversified is, instead of buying a stock, you can buy a basket of stocks. It's called an exchange traded fund, or an ETF. And you can basically buy that exchange traded fund. Let me look one up real quick. And it's like being diversified in all those different companies. So if you ever go to a stock or any kind of ticker, you can see we'll scroll down, and under about, it's going to tell you what it is. It says IVV tracks a market capped weighted index of U.S. large and mid cap stocks selected by the S&P committee. So if we were to go to another one of these, like let's try SPY, and again we can check out the about and see it says the same thing in terms of what it's tracking. And if you wanted to compare them, you could go to the 1 year chart. You can see this is 30.23%, where this 1 year chart is 30.3%, so they're virtually identical, just about. Here's another one, VOO, which is Vanguard. S&P 500, 1 year chart, essentially the same as the other two. So let's go with this one since it's the most popular. You're going to go to whatever stock or ETF you want to invest in, and you press trade. Then you're going to press buy, and then you'll see it looks like this. At the top right where it says shares, click there. And you can see you can buy it in dollar amount. If I put $1 in, it'll say I'm buying $1 and it'll show you it's 0.002127 shares, which is awesome that you can buy fractions of a share. But we're going to press reoccurring investment, and then it gives you the choice. Do you want to do it every week on, today is a Friday, that's why it says Friday, maybe every 2 weeks on a Friday, every month on the 19th, because today's the 19th, and you can even see at the top option there, you could do every single market day, and then you can also change when you want this to start. So let's do every month, continue. It's going to ask which account do you want to buy it from, and then I'm going to say $1, which I believe is the smallest amount you can actually invest. Press review. And now if I swipe up, it's going to say you're going to buy $1 of this every single month. So I'm going to swipe up. And you can see now that every month on the 19th, it's going to buy $1. Press done, and that's it. You're done. You now are indefinitely investing. As long as that bank account doesn't run out of money and stays linked to Robinhood, it'll automatically every month invest it for you. And on your home page here, you can see your reoccurring investments and make changes to them, alter them. You can see I try to invest $100 in 10 different stocks every month. The only bad side to that is I'm actively managing this to where if I believe a company is not going to be going in the right direction, I will change it. And I'm not as diversified. You can see most of my stocks are tech stocks. But I'm young and I'm willing to take more risk in pursuit of a higher return. But who knows what'll happen. That's just what I'm doing. The point is you can invest as little as $1 a month, which most people can afford. Alright, I appreciate you watching this video. If you want more people to see it, all you have to do is like, comment, or subscribe, and that'll tell YouTube to show it to more people. My dream and hope is that a couple of years from now, someone will remember they watched this video, they'll go back to it, they'll comment, they'll say, hey, I did this on this and such date, and I'm so happy I did because it was a great thing that happened in my life. Don't forget there's risk that might not happen, but that's my dream. I hope it works out for you guys. Thanks for watching. I'll see you in the next one.